Ladies and gentlemen, welcome back to the channel and welcome back to another very exciting day for AMC. AMC is up 4% after following yesterday's 15% rally. That is almost 20% in the span of the last 2 days. What do the numbers currently look like? Is this something that could continue for a while? Well, we're going to get into that here in this video. As well as that, you do have some pretty big moving companies that are going to be reporting earnings in after hours as well today. You had some companies last night, yesterday in after hours that did report that is helping to fuel some of this tech optimism, and that is fueling a risk on rally in a lot of your quote-unquote meme stocks or just your overall riskier sectors of the stock market. Now, you also got PPI that came out today and a new report that debt has now hit a record at $16 trillion and delinquencies are starting to rise. So we have a lot of information to cover. On top of that, we are going to look at the technicals on AMC as we always do, and also give you guys a rundown of the FTDs because we have just got new updates as of yesterday. So we have a jam-packed video to get into here today. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, without any further ado, let's get into it. So AMC, like I said, up about 4%, give or take. Obviously, the stock does move around a lot. You are back up to the key level in which I wanted to see happen here today, and that is $5.30 per share. You are at $5.37 per share. So if we can hold $5.30 into the close and even into after hours, that's going to be an insanely bullish sign in my opinion, and that could get us very close to this downtrending level of resistance line at about $5.86 per share. If it takes a couple of days, it might come down to about $5.60. And if we can break that heading into earnings, that is the best case scenario as of right now, because we have never broken out above this and held a breakout, especially heading into earnings, right? Typically you sell off into earnings, you sell off after earnings, and you rally 2 to 4 weeks later. This time a little bit different in my opinion, because the stock market is actually rewarding companies that are doing good now, right? If companies come out, give good guidance, and they even have okay numbers, stocks are going up 20%, and I don't think that's going to be any different with AMC, and I expect to hear good things from Adam Aron, like the tweet he put out just a couple of days ago. If you go ahead and go to Adam Aron on Twitter, I actually didn't have it pulled up, but I do want to show you guys. There's 35% more movies going to theaters in 2023 than 2022. And this was from Adam Aron just a couple of days ago. And that's a big deal, because AMC is not a company in which create its own business. Essentially, you need movies to go to theaters to get people to go to theaters and to, you know, have AMC post good numbers. And I do think this time around there's going to be some really good guidance for 2023, and you can see right here, this was actually February 10th, 6 days ago. He says, on a lighter note, earlier I said the number of movie releases in 2023 will be 35% more than in 2022. That's so important for AMC's path to eventual pandemic recovery. But then I tweeted a cryptic M, which some of you are decoding. It means nothing. I didn't knowingly tweet it. So obviously it looks like nothing to decipher out of that one. I know some people were talking about it. Margin, maybe margin call, who knows? Maybe it was cryptic, maybe he just don't want to get in trouble with the SEC, who knows? But I think there's some really big things coming, especially around earnings, and the fact that the technicals are supporting a very likely rally, right? You found support at that 450 level, and now you're back above the 530 level. The last technical level I want to break out above is going to be this downtrending level of resistance, this line right here, and I do think that is ultimately coming, hopefully before earnings. If not, after earnings would be okay as well. Now let's look at the Ortex data. Go ahead and refresh this page. The short interest is very close to being higher now than in June of 2021, currently sitting at about 23.5%. 121 million shares that are currently sold short. Cost to borrow average of 566.62%, cost to borrow max of 830.66%, and cost to borrow minimum of 7.6%. Interactive Brokers short availability has 167% cost to borrow rates. This has not been updated since February 12th, I would imagine, since the cost to borrow numbers are over 800%, cost to borrow average over 550%. That the Interactive Brokers number is probably around 300%, right? That's what I would estimate, but we're not getting updates from them as of right now, which is kind of strange. Now, as far as the interesting flow sentiment, 27 orders totaling $5 million, positive order value of 16%. So not very positive, but like I said, guys, I think these hedge funds, they're using the option chain to make it look like they don't have short positions, to really keep that short interest docile, especially heading into a major event like the shareholder vote that's going to be on March 14th. The last thing you want is to see AMC at 35% short interest if you are someone that is short on the name. Now, for this Friday, 3,500 calls in the money, 143,000 calls out of the money. In the money puts at 33,000, out of the money puts at 340,000. So definitely some good numbers here, and the big one is going to be on March 17th, where you have over 500,000 calls out of the money, and get this, 950,000 puts that are out of the money. So it's going to be extremely volatile, I think, especially after earnings. But really, from now until March 17th, you have a big potential to move a lot. Now, let's get into some of the economic data that did come out today. So you have wholesale prices that rose 0.7% in January, more than expected, fueling inflation increase. The producer price index rose 0.7% in January, higher than the 0.4% estimate. Excluding food and energy, core PPI increased 0.5% compared with expectations for a 0.3% increase. In other economic data, jobless claims edged lower to 194,000, below the estimate for 200,000. Also, the Philadelphia Fed Manufacturing Index plunged to negative 24.3, far beneath the negative 7.8 estimate. So really, none of this is looking good. None of it's looking good. S&P down about 0.5% today. Probably not appropriate for the kind of data that we are getting. And PPI does very closely correlate with PCE. Producer Price Index is PPI. That's what it stands for. Or you can think about it like producer price inflation, right? It's the amount producer prices are going up, what companies are paying for their raw materials, for their manufacturing, for their labor. All of that goes into that equation. And then personal consumption expenditure is what the Fed likes to pay attention to. That is PCE. PPI and PCE have the closest correlation. So this doesn't look good for essentially the PCE reports coming over the next couple of weeks, and that is really what the Fed likes to pay attention to monitor inflation. So for good reasons, the markets are down 0.5% today, but you're still getting a risk on effect in the markets, which is good for something like AMC, but at the same time, you got to ask yourself, is this rally real? Now, for today, 1.5 million FTDs that need to be bought back. Tomorrow, 2 million FTDs that need to be bought back. Monday, 2.5 million. Tuesday, 1.8 million. Wednesday, 1.5 million. Thursday at 1.4 million, and on Friday of next week you are going to get over 2 million, and actually it looks like Thursday's over 2 million, Friday is over 2 million as well. So you're seeing a massive amount of FTDs. You have not seen this many FTDs consistently since after the June rally, but I would argue you've seen more as of recently that just continue to be there. You did get a big FTD spike where you've seen like millions, right, in between 2.5 and 5 million FTDs for, I would say, about a week and a half right here, and then it died down. This was after the rally in June. You did see the one big spike in January, but what do you notice about this? You tend to get FTDs that ramp up into these rallies, and that is exactly what you are starting to see right now, and it begs the question of why are you getting these kind of FTDs? Well, people don't want to cover on those short positions. They don't want to oblige for their contracts. And unfortunately, you got 35 days to do that. And those 35 days are starting to come due really heavily over the next couple of weeks. Now, And after hours today, earnings, DraftKings, Applied Materials, Shockwave, Val, DoorDash, Starbulk, Stem, Redfin, Indie, and HubSpot. Redfin, DoorDash, DraftKings, Applied Materials. Those are going to be the big ones. Some people are going to pay attention to Val just because of the sector it is in, but those are going to be very big movers, or potentially very big movers. And then tomorrow in pre-market, you have John Deere and AMC Networks. This is not AMC Entertainment, so keep that in mind. AMC is still going to be, I believe in about 2 weeks, we'll get those earnings, guys. So all in all, I think things are looking pretty good today. There's no company-specific news on AMC. It's more so the effects of how these other earnings are kind of affecting risk on sectors, right? Roku up 20% today. Twilio up almost 20% today. Cisco up like 10%, right? There's a lot of companies that are doing really good today based off of earnings last night, and I think that is more or less what is giving you this effect today, as well as some hedge funds and some retail investors that are positioning for AMC and earnings and the VO on March 14th that are kind of positioning now to get prepared for that. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.